Economists believe that factors such as high inflation, rising interest rates, fragile economic activity, and unpredictable markets have increased the likelihood that the U.S. economy would enter a recession. Hello and welcome to our channel. Today we will be talking about the views of different economists on the U.S. economic crash. However, the range of their projections is vast, ranging from more certain predictions that a downturn is about to occur to a somewhat remote likelihood of a recession, which is typically defined as a contraction of the GDP for 2 consecutive quarters. Generally speaking, forecasters who claim that a recession will be averted point out that they may be overly optimistic, while those who are certain that the economy will contract quickly claim that the recession wouldn't be all that harmful. Here are some recent predictions made by economists, analysts, and strategists regarding the likelihood of a recession. Bridgewater Associates was started by Ray Dalio in 1975, and by 2005 it was one of the biggest hedge funds in the world. His hedge fund managed more than $235.5 billion in total assets for 107 clients as of 2022. With a net worth of almost $22 billion, Ray Dalio is the 67th richest person in the world according to Forbes. He follows geopolitics, markets, economics, and politics as a macro investor. In a recent interview, he provided the following forecasts and cautions for 2022 and beyond. According to him, based on his own historical research, there are 3 phenomena happening in our lifetimes that have never happened before. Number 1, the massive production of debt and money by governments and central banks. Number 2, the degree of internal strife the United States is experiencing over how our taxes are used and disparate values. Number 3, the shifting global order and how China and Russia are now competing with the United States as never before in the past 60 years of modern history. According to Dalio, the massive money printing that has increased since 2020 first produced credit and seemed to be a good thing, but eventually resulted in too much money chasing a fixed amount of goods and caused inflation. Economics is merely math, and increasing the amount of money in circulation results in an equal increase in pricing. The Federal Reserve's increased balance sheet, money printing, and the government's budget deficit all combine to produce a high inflation rate that is currently running at 8.3% or 12% if you take core inflation into account. Whether or not there are supply chain bottlenecks, inflation results when the amount of money being printed exceeds the availability of goods and services. As a result, a currency's purchasing power is reduced. Currently, governments prefer to utilize inflation as a policy rather than taxation because people can more easily accept the effects of inflation on prices and their ability to spend their money. By lowering the value of savings accounts, bond holdings, and paychecks, inflation acts as a tax. In terms of investing, your portfolio is actually down 28% if the S&P 500 index is down 20% year-to-date and inflation is up 8%. The Federal Reserve's present monetary strategy, which raises interest rates while also putting a limitation on the amount of money in circulation, is putting a double squeeze on the markets by causing inflation, reducing the amount of capital available for credit, and raising the cost of new debt. People may spend their money to purchase things that retain value, such as real estate and investments, when they understand that holding cash is a losing proposition due to failing purchasing power. This may result in inflation that continues to rise. People went to extremes in the 1970s and the first few years of the 1980s to prepare for rising inflation, and the Federal Reserve also raised interest rates excessively. As a result of both actions, inflation was finally stopped by an overreaction to it. Dalio thinks that the present inflation cycle is a repetition of the previous one. The future course of the global power dynamics will be determined by how China resolves its disagreements with the United States, which it now competes with on a number of fronts, including economic commerce and military might. The conflict in Ukraine has forced nations throughout the world to choose sides they will support through trade and sanctions. The future globe will be shaped by these alliances. The nations with the best educational systems will produce inhabitants who are highly productive and earn high wages. The amount of education in a country can be used to measure a lot of its success. In contrast to those nations with issues of high crime and corruption, those nations who have a well-established rule of law and maintain law and order will grow over time as they draw investments and immigration. Over the following 10 years, there is a negative 52% inverse relationship between a country's growth rate and its level of corruption. Russia is the most wealthy nation in terms of commodities, but it is also one of the most corrupt, which lowers its output. According to Ray Dalio, there is a 33% chance of stagflation in 2022, which is inflation during a downturn. As people choose sides and even relocate to states that correspond with their political ideas, Dalio predicts that the United States will see a civil war within the next 33% of years. If Russia loses, Dalio believes there's a larger than 33% risk that the conflict in Ukraine would turn into World War III, and he believes there must be another way to win. To protect against both inflation and stagflation, Dalio advises diversifying your assets among stocks, real estate, gold, and companies. The risk of a recession, according to Daniel Bachman, the team leader of the consulting firm's U.S. economic forecasts, is 15%, which is less likely than some analysts would have you believe. According to the research house's chief economist, Ian Shepherdson, base case remains that a recession is improbable, and that, if it does occur, it will be short and light. Chief U.S. economist Ellen Zentner of the investment bank observes that accelerating inflation has been a regular forerunner to recessions. However, despite high and growing prices, the bank's models predict a 30% chance of a recession within the next year. Nathan Sheets, the global head economist at Citigroup, and his team of economists predict that the U.S. economy would slow but not contract, even though we regard recession probabilities as considerable and rising. The bank's global head economist, Janet Henry, and her colleagues do not foresee a U.S. recession, but their projections do show a downturn that will be just as uneven as the recovery that came before it. The projected probability of a recession over the next 12 months has increased to a uncomfortably high 35%, according to economists at the country's largest bank, led by chief economist Bruce Kasman. They conclude that the risks are clearly tilted to the upside on inflation and to the downside on growth. A U.S. recession is not anticipated by the Economist Department of the Canadian Bank, which is headed by Chief Economist Beata Karanci, despite the fact that growth is near to stall pace, and there is a very tight margin for error if another shock hits economies. According to the team lead by Jeremy Schwartz, the Swiss bank's director of U.S. economics, the U.S. economy is on the verge of a recession after significant revisions to its estimates, but there are buffers that should prevent the economy from spiraling into a bigger slump. According to Kathy Bostjancic, the organization's chief U.S. economist, the Federal Reserve has a fighting chance to control inflation without starting a recession. She has lowered her growth projections since they are precariously close to tipping into a recession by mid-2023, according to her. Global economist Ethan Harris of the bank predicts that growth would decline to practically zero in the second half of 2019 and only a moderate return in 2024, with a 40% risk of an actual recession. According to chief economist of the United States, Beth Ann Bovino, economic momentum will certainly preserve the U.S. economy from recession in 2022. She estimates that there is a 40% chance of a recession, adding that it's difficult to envision the economy getting out of 2023 undamaged. The chief economist outlook report from the World Economic Forum contains the opinions of more than 50 chief economists from around the world. Most economists prioritize inflation, growth, and cost of living, with the clear majority projecting that real wages will decline in almost every economy. With this, we conclude our video. We appreciate you helping us by keeping it going by watching. The best way to support our channel is to watch another episode. Thank you for tuning in. To ensure that you never miss an episode, please subscribe to the channel.